Hey, welcome back to Two Super Guys Trade Talks. I'm Dylan.
And I'm Vinny. And once again, for us Alibaba shareholders, we've been waiting on this Chinese government stimulus. We finally get some details on it, but it wasn't quite what we hoped it would be. So we're going to talk a little bit about it. So in case you were wondering, this background right here, this little cliff, that was the market's reaction in Alibaba stock to the Chinese stimulus announcement.
No bueno.
They were not pleased, to say the least. Don't forget, this is in the context of us being up 17% though over the last 6 months. So we've had quite a nice run up. This little blip here is hardly anything at all. However, we were getting some stimulus along this pathway, this trajectory up. So don't forget about that. We're going to talk briefly, recap kind of what was going on there. You remember they were cutting the interest rates, right? They cut the rates by
Yeah.
25 basis points on existing mortgages. They lowered the reserve ratio for the Chinese banks to allow them to lend more. They instituted a program which allowed direct lending for purchasing of stocks. So there was a lot of stimulatory action going on at that time. However, we were being promised this like significant stimulus package coming down the pipeline, and we finally got it. And it sounds like they're trying to keep a little bit of dry powder. We're going to talk a bit about that. So, this is the kind of initial thought here was this funding scheme to buy stocks. That's what I was mentioning before, in terms of the stimulatory effect that was taking place during that bull run.
Yeah.
Well, we're looking for another big, massive round of stimulus here. And finally, when the details got announced, this is what the market did. Displeased to say the least. All
We
right.
wanted more.
We wanted more. And it was $1.4 trillion ultimately, but it's kind of a debt swap. So is it really stimulatory? This is my understanding of this, okay, is that the Chinese Communist Party is going to issue $1.4 trillion bonds, basically. I think it's like 10 trillion yuan. And they're going to use that to take debt, all of this hidden debt from the local governments. The idea being now the local governments will be more freed up to stimulate the economy. So it's really one arm of the government borrowing from another arm of the government, right?
Yeah.
Is that really going to be,
It's also
stimulatory to the underlying economy?
it's also indirectly helping when we were hoping for more direct. So there's also that because the theory
Yeah,
is if you swap it, then you'll have. So I mean that's an extra step. So I get it. That's fair.
exactly. If we saw direct consumer stimulus like we saw during the pandemic here in the
Yeah.
U.S., where they were mailing, $1,400 checks to citizens, I can only imagine what would have happened to the Alibaba shares. Okay, it would have gone
Very good.
absolutely parabolic, right?
Yes. That would have
Yeah.
been great.
So this is like a little bit more nuanced details, but it's basically recapping what I was just saying there. 10 trillion yuan, 1.4 trillion US dollars. But it is a debt swap, and that investors were not really happy with this. All right. Now, I'm trying to remember if I highlighted it here. It might have been on the next slide, actually. Yeah.
It's on the next one.
So this is kind of what the thought process is now, right? We got this announced a couple days after the US election, and, whatever your opinion of that is to each their own. But this makes sense in a environment where you have a lot of talk, at least amongst those Americans, about instituting a little bit more protective tariffs of the U.S. economy, and the Chinese government potentially being the, I would say, punching bag, or chief adversary, or major counterparty to many of this. So the idea or the question here is: are they cutting back on this stimulus announcement because they want to have plenty of dry powder and a lot of things that they can do to move the lever coming in January of 2025, when they may have to stimulate their economy to counteract some of these tariffs that are coming into play? Right? It's a completely logical position to be in.
So you're saying could have been much different. So if Kamala had won, then could have been a bigger stimulus versus Trump. Now they got to play the cards a little bit, wait to see what happens, make sure that because you don't want to play all your cards up front. I mean, I can respect that. I don't like it,
Yeah,
but I respect it.
yeah, as an Alibaba shareholder, yeah, this is not going to be profitable for us in the short term. We'll have to wait and see what actually materializes come the transition of power in January, and what sort of position that our Chinese counterparts have put in, and what the response would be at that point. So that's really a little bit of a wait and see. We kick the can down the road a little bit here. I think that this little debt swap wasn't what the market was hoping for, hence the sell off. But there's still a potential that we see a rather significant stimulus, but we may not see it now for a few more months. So that's kind of
Yeah.
unfortunate.
I mean, fair.
Yeah. And then as far as Alibaba shareholders, we have two things coming up this week that I wanted to highlight for you. One, we're gonna get the Michael Burry 13F for the most recent quarter because it's been 45 days since the quarter closed approximately this week, and we're also gonna get earnings announcement before market open on Friday. So this will be something we'll talk about next weekend, but obviously, it'll be something I'm listening to once they do their earnings announcement, reading the kind of data, and then also listening to the conference call. So, we'll get some individualized Alibaba shareholder news from that, of course.
I think I'm more looking forward to Burry because he doesn't hold stuff long. He's more of a
Yeah.
trader than an investor. He does a lot of
Mhm.
trades, and he doubled down on this earlier, and JD. So it would be very interesting to see if he's still holding, because if he's still
Yeah.
holding, that means he still sees value. Granted, there's a time difference, so
Yeah.
we don't know what he's holding exactly, but
But during the quarter there was a significant run up. So yeah, put it this way: if he has more than hasn't decreased his position more than 30%, I would take that as bullish. I'll bet you he's decreased his position at least 30%.
I, yeah, I mean, I would respect if it did because it ran up a shit
Yeah.
ton, so that's fair. All right, guys, let us know what you think.
Guess the next one.